I think we'll get cracking because we've got a lot to cover off over the next hour. So welcome and thank you for joining us this afternoon. So my name is Louise. I'm a partner within the medical team at Larkin Gowan. And I'm delighted to be joined today by Graham from MediFintech. And we will be discussing the latest developments within the McCloud Remedy and what that means for NHS Pension members. As we go through the session over the next hour, if you have any questions, please do just pop them into the question box, and we'll keep an eye on that as we go through, and there should be some time at the end of the session to go through those. If for any reason we don't get through everything, please do pop your questions in still, and we can follow up with you following the session today. So as I mentioned, I'm joined today by Graham from MediFintech. So Graham and his fellow team provide expert NHS pension support for NHS pension members, along with NHS employers and professionals such as accountants like myself, financial advisors. And they can help you to understand your own pension record, as well as looking at any gaps in your membership, identifying any errors with your pension record, as well as those dreaded annual allowance tax charges.
Great, thank you very much. So yeah, we're going to talk about the latest developments with McCloud and the actual remedy then for NHS pension members. Yeah, thanks for the introduction. We're very much sort of specialists in the NHS pension arena. All of my team formerly worked at NHS pensions, so we've got a really, really good understanding of how the scheme works, as well as some of those technical niche bits of knowledge that not many people really understand. And we've helped thousands of people now when it comes to their NHS pension and saved them millions by identifying and correcting errors either through annual allowance, also on their pension record as well. So today I'm going to be talking about the brown envelopes, because we're now coming up to October. We should now you'll start seeing those land on your doorstep, all about annual allowance. So we'll cover off a little bit about how annual allowance works and the McCloud remedy and what's just about to happen, where we've got this reassessment coming up and how you can process that reassessment. So first of all, these brown envelopes. So these are the annual allowance pension savings statements, and they're typically sent to you if your pension growth is more than the annual allowance. So currently 60,000, previously 40,000, but it's also sent to those who might who have any sort of practitioner membership as well on their pension record. So it's issued each year and it reports the previous year's pension growth, all for those annual allowance calculations. Now this year we should be getting one for the 23-24 tax year, which again due out by the 6th of October. But we also now have this revised pension savings statement, or RPSS, as I'll be referring to it during this session, which will cover many tax years from 2015-16 up to 22-23, which is also meant to be sent out by the 6th of October. So when you get these letters, please do not bury your head in the sand or just throw the letter in the bin, because this time with these RPSS, you could actually be entitled to a tax refund if you've paid tax charges over those 7 years. Let's first of all look back at annual allowance and how this works. So the annual allowance is the limit to the total amount of contributions that can be paid to a defined contribution pension scheme, like a personal pension or a SIP, as well as the total amount of benefits that you can build up in a defined benefit pension scheme, like your NHS pension, each year for tax relief purposes. Now, this applies to all of the pension schemes that you belong to and includes all of the contributions that you or your employer makes. So if you have private practice and you're putting money into a SIP as an employer, you need to consider those amounts as well. Now, if you do exceed the annual allowance in any one year, you can offset any unused allowances from the previous 3 years under a mechanism called carry forward. But if you still breach the annual allowance, then that excess is charged at your marginal rate of tax. Now, originally, this started off as quite a significant allowance. It went up to £255,000, and then it was seen as a very easy target to raise additional revenue. So we saw it fall to 50, then 40, and then the introduction of different mechanisms to reduce it down as low as 10,000 and then 4,000. We're now in a position whereby it's come back up a little bit. So you have a £60,000 annual allowance. However, if you earn significant sums, you could see that allowance being tapered down to £10,000. Now, the calculation for annual allowance does confuse some people. It's nothing to do with your actual pension contributions. It's all about the growth in your pension benefits over the tax year. That's the pension input amount. You might recognise that term from those pension saving statements. So to work this out, we have to look at the value of your benefits at the end of the tax year, your closing value. So we take the pension that you've accrued, multiply that by 16, and then add the lump sum. We then take away from that the value of your benefits at the start of the tax year, your opening value. So again, we look at the pension, multiply that by 16, and add the lump sum entitlement, but we also have this allowance for inflation. So it gets increased by CPI, so Consumer Price Index, and using the CPI rate from September before the tax year started, and that closing value minus the opening value is your pension input amount. Now, those are the things that you actually see on these saving statements. So you might see that term, opening value, closing value, and that's all it is. The closing value is that pension times 16 and add your lump sum. And you'll see also on there your pension input amount for growth figures. So you'll see the relevant tax year, that figure you can see on the screen now, the 27,500, but you've also got the 3 previous years to show you those amounts for carry forward purposes, so you can use unused allowances from previous years. Now you can also see this information on a new document if you're in England and Wales. So you can ask NHS Pensions to give you a copy of your annual allowance and service and pay extract spreadsheet. And I would urge you to do this at least once in your career. So you can call them on the 0300 330 1346 number or email them and you'll receive this document. So it will show you all of those closing values, the opening values, and also the growth figures as well for the 95 section, the 2008 section, and also the 2015 scheme. This bit of data is currently being updated because of the McCloud Remedy, but you should be able to see these soon. But the other really important thing about this document is the service extract, because what it has here is a record of all of your pensionable employment within the NHS. So for each role, it has the start date, the end date, and your pensionable pay for that role. It will also show if you worked a less than full-time contract, the hours that you worked, what the standard hours were, and what the hourly or sessional rate is. I would urge you to go through this document and just double check there's no gaps that shouldn't be there, there's no records that haven't been closed off, because if you can't get, for example, a total reward statement, you can normally spot the culprit by looking at your service extract. If you do have missing service, it can significantly reduce your pension benefits. But there are ways of repairing this. You will be able to sort of submit evidence to the scheme and they can reinstate that membership. We also find some people who might have moved between nations that they have left pension benefits in those former nations. The NHS pension is administered by different organisations. So, for example, in Scotland it's SPPA, in Northern Ireland it's HSE, and in England and Wales it's NHS BSA that administers the scheme. Now, normally, you only have 12 months from when you move nations to transfer your pension so it comes along with you. But late intranation transfers can be possible in some circumstances. So if this is you, it's worth investigating and checking to see if you can still move that pension. Now, we do see quite a few common pension errors. And we've saved, as I say, over £5 million now correcting these errors since we started back in May 2019. One of the big errors we see is this best of 3 error. Now, your 1995 benefits for those who are officers, so consultants, etc., that your benefits are based on the best of the last 3 years' pensionable pay. However, up until June 2020, they only used last year's pay. So if your pay went down and then up again, for example, dropping on call or dropping responsibilities, you could be charged for the same pension growth twice. Fortunately, this rollback that I'll be talking about in a moment will fix that for 2015-16 onwards, but it is still applicable for 2010-11 to 2015-16 because of those carry forward rules that we mentioned. Now, the other issue we come across quite a lot is misallocated arrears. So this is where you have pensionable pay from a former year causing this artificial spike in your pensionable pay for this year. One of the biggest culprits of this was the old local clinical excellence awards and national clinical excellence awards when they were pensionable, because you could end up creating this artificial pay which caused artificial pension growth, which caused a very real tax charge. And again, we've saved significant amounts of money on this. We are also likely to see misallocated arrears very prevalent in last tax year because of the consultant pay deal. Because the consultant pay deal has actually been backdated to March. There's 1 month's worth of pay that should be in last year, not this year. And then the final one is incorrect carry forward. Whilst you can use the unused allowances from the previous 3 years, those 3 years are impacted by the years before them. There are also a plethora of other different errors. And if you really want to know more, well, there's a QR code there at the top of your screen, which links to a thread that I put together on Twitter with some of the more niche errors that we come across. So with regards to the McCloud Remedy then, this all started back in 2011 with the Hutton Report. It proposed reforms to public sector pensions as they were deemed to be too expensive. Members were living too long. They wanted to get away from this final salary pension and move everyone towards these career average revalued earnings schemes and extend that normal pension age to state pension age. In the Hutton Report, they specifically mentioned that special protections for members over a certain age should not be necessary. However, when the reform schemes, the 2015 scheme was introduced, it had this transitional protection that let older members stay in their legacy schemes. Not surprisingly, younger members were aggrieved, and so the judges took this to an employment tribunal in the name of McCloud. Firefighters did the same under a case called Sargent, and it escalated through the courts until July 2019. Government accepted that this discrimination needed to be remedied. Now, who does this actually impact? It's all members who are in service on or before the 31st of March 2012. So that's people who are still working in the NHS, still contributing to the NHS pension. It could also be people who have now left the NHS or are still working but have opted out of their pension scheme, so those deferred members. And it also includes people who have already retired, whether that be through standard retirement or ill health retirement, or anyone in receipt of a spouse or dependent pension. It also includes all of those people who had that full or tapered protection, the people that never moved into the 2015 scheme originally. They are also impacted by the McCloud Remedy. And there's a lot, there's nearly 1 million members who are going to be impacted within the NHS pension scheme alone. And what's going to be done to remove this discrimination? Well, first of all, the 2015 scheme itself is not discriminatory. It was this bit, the transitional protection, the bit that said those closest to retirement age got to stay in the 9508 scheme. So that has been removed retrospectively, and in its place, members will be given a choice. Now, your choice will apply to something called the remedy period, which is the 7 years between April 2015 and April 2022, and your choice will apply retrospectively to the benefits that you built up during those 7 years. So you will get to decide, do you want those benefits in your legacy scheme, so the 9508 scheme that you were previously in, or would you prefer those 7 years worth of benefits in the reform scheme, the 2015 scheme? Now, fortunately, you don't have to make this choice until you actually take your pension benefits, but there are some important events on the timeline you need to be made aware of. The first one was McCloud Remedy Part 1, so this occurred back in April 2022. Whereby all continuing pension accrual, all new service is in the 2015 scheme for everybody, irrespective of your age. So that was scrapping that transitional protection. Now, as long as you stay in the pension scheme, those benefits that you built up, they will continue to benefit from increases in your pensionable pay with this final salary link if you're a consultant. If you're a GP, then they will continue to benefit from dynamisation, where all of your earnings are increased by CPI plus 1.5% each and every year, as long as you stay in the scheme. If you opt out the scheme, then benefits only increase by inflation. Now, we're starting to see the second part of the McCloud Remedy apply. The first element of that is the rollback, and this occurred on the 1st of October last year. So there was no choice in this. This automatically happened. All of the membership that you have between 2015 and 2022 for impacted members has automatically been rolled back into the legacy scheme from whence you came for those 7 years worth of benefits. There was no choice, that's just happened. Now, as you're in a different pension scheme from those 7 years, there are a couple of things that you will need to address. First of all, there are elements in the old pension schemes that didn't feature as far as elements in the new scheme. So, for example, we have early retirement reduction buyout in the 2015 scheme. There is no ERBO in the old 9508 scheme. So you'll have to make a choice. Do you want to hold off and wait until you retire? And to then, if you choose the reform scheme, you could use that ERBO, or do you want your money back, or do you want to convert it into an additional pension in the old scheme? But one of the big changes is your pension growth over those 7 years. The 95, the 2008 and 2015 schemes all grow pensions at different rates. And remember, your annual allowance is all about how much your pension has grown during the tax year. So all of those annual allowance calculations between 2015-16 onwards will need to be reviewed. And then finally, at retirement, this is when you get your choice. You'll be able to choose, do I leave my benefits where you've already rolled them back to in the legacy scheme for those 7 years, or should I move them into the 2015 scheme for those 7 years? And this is the type of analysis that we've already been doing for members for quite some time. When we project people's benefits, we actually show, well, this is what happens to your benefits if you choose the legacy scheme. This is what happens if you choose your benefits in the reform scheme. And it will be very much down to your circumstances as to which is best. There is no one size fits all on this. Now, how will this remedy period be assessed for annual allowance? And again, it depends on your circumstances. So if you joined the 2015 scheme before the 1st of April 2022, and you haven't taken your pension benefits by the 1st of October 2023, then your pension input amounts, those pension growth, those annual allowance calculations, will be based on as if you had been in the legacy scheme, so the 9508 scheme, for those 7 years. So that's the big cohort that's going to have to review and change their annual allowance calculations. If you had taken your pension benefits by the 1st of October, you're going to get something called an immediate choice. We say immediate, but it might take some time for NHS pensions to get to you to give you this choice. They are hoping to try and get to about 70% of members by the end of this year and everybody by April next year. But given the sheer amount of administration that's required, I wouldn't be surprised if that slips. However, once you've got this immediate choice, you will be able to decide, do I want my benefits in the legacy scheme or the reform scheme? Your pension input will only change if you chose the old 9508 scheme. Now, if you're one of these members who only joined the 2015 scheme on the 1st of April 2022 under that McCloud Remedy Part 1, if you haven't taken your pension benefits by the 1st of October, well, you were already in the legacy scheme for those 7 years, so no change to pension input amount. You don't need to do any reassessments. If you have taken your pension benefits by the 1st of October last year, well, again, you will get an immediate choice. You could decide to keep those benefits where they are in the legacy scheme, but you could also choose to put those in the 2015 scheme. Now, the pension input amount will only change if you choose to put them in the 2015 scheme and that pension input amount is lower than you originally had under the legacy scheme. The majority of people caught up in this will actually be those who joined before the 1st of April and haven't taken their pension benefits. So what will actually happen when you do this reassessment and work out that your tax charges are different? Well, normally under self-assessment, if you have a change in tax, you can only go back for 4 years. But if you have a decreased tax liability, the government will account for the whole of the remedy period. So you'll get this compensation between 2015-16 and 18-19, and then a refund of or rebate for 2019-20 to 21-22. If, however, you have an increased tax liability, Well, HMRC are only going to collect for 4 full years previously. So it will only be for underpaid charges from 2019-20 onwards. Now, we don't think there's going to be many that fit within this cap. It will tend to be people who maybe became consultants towards the end of the remedy period, as some who became GPs during those 7 years as well. They might find themselves with an increased tax liability. Also, anybody who has mental health officer status, where you get double accrual after 20 calendar years, they might also have increased tax liabilities. Now, if you do have an increased tax liability, you will still be able to use the scheme pays mechanism, so that the scheme can pay the tax charge on your behalf. It then accrues interest, and then it gets permanently deducted from your pension when you retire. You would also be able to use the 2019-20 annual allowance compensation scheme as well, if you have a new charge for that year and you qualify for that scheme. If you need to change historic scheme pays elections, you'll be able to do those as well if there's a decreased tax liability on those. And one of the good things is that the annual allowance is not reassessed when you make your final choice of which scheme to be in, because if you decide that it's right for you to be in the 2015 scheme, you don't have to do this again. It's already assessed based on having been in the legacy scheme. So just to give you an idea of what we've been seeing, this is the pension growth for a consultant. So the gold bars are the pension growth in the 1995 section. And then you can see in the purple bars, when the 2015 scheme was introduced, the growth from that scheme, but also remember there's that final salary linking. So the old scheme also keeps growing. Now, if we overlay the annual allowance, all was fine until we saw the introduction of annual allowance taper, and suddenly the annual allowance came down and this member was then exposed to tax charges. So over those 7 years, they've paid a little over £16,000 in annual allowance tax. Now, if we roll back all of that membership and put it only in the legacy scheme, the 95 section, you'll notice that the pension growth is a little bit lower. And that then has an impact on annual allowance taper and more annual allowances available. And so this member ends up with no tax charges across those 7 years. So they will actually be due compensation of £16,000. This is why I said at the beginning, don't bin these letters, don't bury your head in the sand, because you could be getting compensation and getting tax rebates from this. Now, there's another important thing with regards to McCloud, and it's called contingent decisions. We know since the 2015 scheme was introduced, people have opted out, they've given up valuable added years contracts, or they've hokey-cokeyed, where they've left the scheme for a bit, rejoined, left the scheme again, and then rejoined again, all to try and control those pension input amounts to try and avoid annual allowance tax charges. Under the McCloud Remedy, you can have retrospective membership. You can reinstate some or all of those gaps, and the only evidence you need is timing. So you can reinstate membership from October 2014 up to April 2022, and it doesn't have to be all of it, it can be some, and within that there are opportunities with how contingent decisions could work. It's never going to be as straightforward as doing all or nothing. There are definitely ways where you can get better outcomes by looking at partial retirement. Now, we are still waiting for the final details of how contingent decisions is going to work. What we do know is that employee contributions would be needed in order and paid retrospectively with interest. There is likely to be an option to pay lump sum. There'll be an option to pay via a payment plan, or if you've already retired, potentially using your benefits in order to pay for the extra contributions. But as I say, we're still waiting for the final details of how that's going to work. So once you've identified that you have got these, that you have to do this reassessment, to process it, HMRC have launched this new digital service, which is called the Calculate Your Public Service Pension Adjustment. You can look on online, the QR code will take you to the service if you want to have a look at it. And you can use this service to calculate any of the repayments due for previously overpaid lifetime allowance or annual allowance charges, and also determine new or reduced or additional lifetime or annual allowance charges as well for that remedy period. What it will also do is it will then submit those details to HMRC for review. Now, before people panic and think, how am I going to be using this service? Because it does stretch to hundreds of pages, NHS Pensions have launched this NHS cost claimback scheme, whereby the scheme can compensate you for any direct financial loss associated with the discrimination. Now, specifically within this, they have identified that you can have up to £1,000, including VAT, for getting professional support if you're going to use that full HMRC digital service. Now, not everybody who receives an RPSS will need to use the full HMRC digital service. Rule of thumb, if you had a tax charge in those 7 years, you're going to need to use the service. If you didn't and you still receive one of these statements, you'll have to go through a series of triage questions, which should hopefully be straightforward, and you probably won't need support for those. But if you do, it's unlikely you'd be able to claim £1,000 for support through that. It would have to be potentially a more modest sum for that, but it's a lot less work to do that triage rather than the full service. The information you're going to need is you're going to need these RPSSs, the revised pension savings statements, and within those it includes all of your revised pension growth for the remedy period, so 2015 to 2022, plus it also includes the preceding 5 years all the way back to 2010-11 for carry forward calculations, and also the 22-23 pension growth figures that were put on hold last year. You also must wait until you get this RPSS before you can do any of this. You will also need historic tax data going back to 2015-16. So it will be taxable income, tax release claimed, personal allowance, any tax charges that you've paid for annual allowance, and how you've paid them, whether that be direct or via scheme pays. Fortunately, if you don't have all of this information to hand, we've been working very closely with HMRC, as have others, and we've developed this HMRC data extract, whereby if you ask them for your data, they will be able to send it to you, and it should be pretty much all of the information that you need to actually fulfill the digital service. So as an overview, there's going to be the initial questions and this triage process, and if you have got this tax charge, you're going to have to go on to the next bit. And as I say, this full digital service can now extend to 200 pages, because when you start getting into annual allowance, there's general annual allowance questions, and then there's questions for each and every tax year asking about taxable income, personal allowance, all these reliefs. So as I say, this is where you can get support to do this. You don't have to do this on your own. And then once you've gone through all of that, you'll end up with the calculation results, which look like this. So they'll tell you the amount of compensation. So that's the amount of money back for those years up to 2018-19. The increases in tax charges, so that's from 2019-20 onwards, and also if there's any decreases in any of those tax charges from 2019-20 onwards. It can then be used to sort of facilitate those changes to scheme pays or to get your money back if you've paid directly. So it will all be covered within the service, or your agent can actually do this for you. Now, there are some important deadlines to complete the HMRC digital service. The first one is for new charges between the 6th of April 19 and April 2023. Now, this deadline is very, very short. You would need to complete the digital service by the 31st of January 2025 if you had not started to take a pension by the 1st of October 2023. So that's basically active or deferred members. Now, for GPs especially, you might not actually get an RPSS right now. So you will have 3 months from receipt of your RPSS before you have to complete this digital service. If, however, you have already started taking your pension benefits and you're a pensioner member, well, you've got a bit more time. It's the 31st of January 2027. Now, we think this first deadline is ridiculous. It's too much to do in too short a time, because people aren't going to know that they've got new charges unless they do the full digital service. So we've actually requested for these deadlines to be extended. If, however, you were overpaid tax originally, you have another deadline. This one's a bit more generous, so you've got until the 31st of January 2029 to complete the digital service if you hadn't started to take your pension by the 1st of October last year. But if you had, again, another 2-year extension, 31st of January 2031. So we're now starting to see the beginnings of the McCloud Remedy being applied, and this whole process to get you sort of compensations and rebates. But it might be with us for quite some time, given these deadlines that we've got. So more than happy to answer any questions that we might have had coming through.
Thank you, Graham. That was a whirlwind of information. So, as I said, there's lots to take in here. So I would definitely recommend kind of going back and just rewatching this again and making sure it's kind of, processed. So we do have some questions that have come through. So as GP partners, would we be liable to pay additional employer contributions if an employee who had previously opted out decides now to retrospectively opt back in?
That's a really good question, and it's interesting. We're still waiting for the final details. In the original response, government said that for contingent decisions, you would have to pay the employees' amounts, and the employers' contributions would effectively be rolled up into the whole scheme valuation. Now, in those situations, if, for example, I'm going to take it a little away from GPs to begin with, because it's slightly relevant. If, for example, you were a consultant that had one of these pension recycling systems whereby your employer paid you money because you weren't contributing to the pension scheme, they will be writing to the employer to then get that money back off the individual, which then makes it interesting for GP partners, because it depends on your partnership agreement. If you weren't in the scheme, did you get the employer's contribution effectively as extra income? Was it split to you, or was it split across all of the partners? Because if it was split to you, then, well, that might be an easy thing to reclaim if they go down that route. But if it was just simply part of the overall partnership profits, well, that's going to be fun to try and recover. And so the specific answer is we don't categorically know until they give us the final details on this, but they have said employers' contributions will be wrapped up in the valuation. But I kind of think that if they look a bit more closely at GP partners, they might rethink that and they might ask for money back. But we don't know for certain yet.
Tricky one, isn't it? I mean, I would hope that there wouldn't be too many employees that would have opted out, maybe salarieds potentially, I guess, from a GP practice perspective, because I can't imagine huge numbers would have been caught by annual allowance charges previously.
No. GP partners, though, we saw, especially in 2017-18, when we saw the CPI disconnect really hitting first, because that annual allowance, you had the inflation uplift of 1%, but your benefits used CPI 3%. And so we saw a lot of GP partners starting to get annual allowance tax charges in 17-18. And from that, we saw the behaviour of people opting out and hokey-coking, etc. So I think GPs will be specifically impacted quite a lot by this remedy, and could also be one of the biggest beneficiaries on contingent decisions. One thing to point out for GPs is the way that their benefits work. If, say, for example, you'd been opted out for the whole of the remedy period, you wouldn't have to reinstate all of that membership, because let's say, for example, you decided to put 1 month's membership in March 2020, well, that triggers the catch-up dynamising, because as long as you rejoin within 5 years, you get that CPI plus 1.5% for each and every year applied just for that 1 month contribution. And then if you go in now, September 2024, that's also within 5 years of the March 2020. So you suddenly got, for 2 months worth of contributions, 9 years of CPI plus 1.5%. So it could be some exceptional value for GPs. GP pensions are wonderfully complex, and hindsight bias to look at is brilliant. But just trying to work out what you should have done.
Absolutely. Another question has just come in. They missed the early part of the presentation. So this was something we very briefly covered, but they, as a GP partner, forced to try different options over the years to try and mitigate annual allowance. So stopping added years, came out of the pension scheme, they've done scheme pays, paid pension charges personally. So this is what we're talking about by the contingent decisions, isn't it? And there's, when you start to think, if you've stopped added years, if you've opted out, if you didn't go back into the 2008 scheme, there could be hundreds of different scenarios that we could be looking at here.
Absolutely, because for example, this GP in question, if you're now gone back to the 95 section, well, your pension growth could be lower for that year. So you might have decided, actually, you know what, I'd have kept my added years contract, and therefore they should be able to reinstate it. And they have specifically said that added years contracts will be able to be reinstated. But again, we're just waiting for the final details of how that's going to work. I feel sorry for the pensions agency on this one, because that is also going to be an amount of administration to do. So yeah.
Another question just come in. Added years, are they still going into the 95 scheme forever, or is there expected to be a change? Is the advice to continue with added years?
So yeah, the added years contract is a contract for the 1995 section. So the change that we saw from April 2022 was for all new service. That was classed as an existing service, an existing contract. So as you continue to make those payments, it will still be that fulfillment of that added years contract within the 95 section. So that's not changing. That's a standard contract that you've got
there. What idiosyncrasies are there for Scottish members?
Well, first of all, will be the statements and when they come out. So yeah, we're not sure when they're going to get their statements out. But also, for example, scheme pays works very differently up in Scotland. So they work out, for example, how much to take away from your pension to start off with, whereas in England and Wales, it's a debt which accrues interest and then gets converted to a pension debit at retirement. But the same principles broadly apply in Scotland as they do in England and Wales. Although I must say, it seems that Scotland have been a bit quicker to do the choices exercise for retired members, so they've been a bit quicker there. So we will see sort of difference in processing times between the different nations, but broadly your benefits are roughly the same in both schemes. The key thing I would always check though is if you've ever moved between nations, that you took your service with you, because it can make a huge difference.
Absolutely. So coming back to these brown envelopes that we spoke about at the very beginning, if someone hasn't received a brown envelope, does that mean they're okay and they don't have to worry about it and we're all good?
Not really, particularly if you're a high earner as well, because if your annual allowance has been tapered down at any point in time, well, even though you might not have breached the 40,000 or 60,000 annual allowance, depending on which tax year, you could have breached a tapered annual allowance. So I would suggest to request your RPSS and also your normal pension saving statements on a regular basis, on an annual basis anyway, just so you've got those numbers and you can check. Because unfortunately, this is technically, it's your responsibility as an individual. No one's going to tell you you've got a tax charge. You've got to self-assess and then report it to HMRC. And not having the information is going to be critical.
Yeah, absolutely. And what happens if the reporting, so if someone's got a new charge for that 4-year period and they miss the, so they had a statement, but they miss the 31st of January 2025 deadline, are we looking at penalties for those members? Do we know?
Technically, it could fall within the usual sort of penalty regime of if you haven't declared things on time. So there's nothing new there. The only thing is that that these deadlines, I think, are not realistic, and I'm hoping that they will change. Unfortunately, they've already set precedent with those people who have already retired. So if you've got a new charge and you've retired, you've got an extra 2 years. So why not give everybody those 2 years? Let everybody give them until 2027 to fix. And again, for getting money back, you've got until 2029 or 31 if you've already retired. So again, I'm hoping that should give people plenty of time. Although I do know how long it has taken some GPs to get their records fixed. So
yeah, because I'm guessing if there's gaps in the records, and because quite often we might request a pension saving statement for a client and they can't produce it because there's a gap that's stopping any future years being processed. So if you've got a gap in your record, that's going to stop the statements generally coming out. So it's really important that we be looking, or members are looking at their records, as you said, and trying to identify what those blockages are.
I did a freedom of information request on this back in February and asked how many practitioner members haven't got their records up to date to March 2022, and it's like 26,400. So there's a lot of people that didn't have it. Fun enough, I've just repeated that FOI just to see if anything's been updated since then, and we'll hopefully be getting the results of that soon.
I feel like about 10,000 of those we look after sometimes, because it's everyone you look after. There seems to be gaps with things. A few more questions. If they have had annual allowance charges in the past and we've done scheme pays elections and the growth has come down to a figure that maybe they would have paid it personally, can you completely cancel the scheme pays because previously they've always been irrevocable and you can't suddenly change your mind? Does this open up an option for that? Do we know?
It's a very good question, and it's actually one that I've actually put to the Public Service Remedy team, because you combine two elements of the government response. One was, would you have made different choices had you stayed in the legacy scheme? Well, yes, you probably could, in exactly those scenarios. And I've also put the scenario vice versa. Well, if I've paid money, maybe I want that back, and I now want to use scheme pays for those years because it changed significantly. I would hope that they do facilitate this. I can't confirm that they are going to until I've had a response back from HMRC. But I can definitely see people that would have made different choices because of different tax charges at the time. So I can't see why they wouldn't allow it, because the administration is not significantly more than what they already are having to do, because they will have a mechanism to facilitate compensation payments from HMRC. They already have a mechanism to amend scheme pays elections and revoke scheme pays elections through the scheme administrator. So all the steps are in place. It's just confirming that they thought about those rules. I would also bear in mind, this whole thing is so complex that there's a lot of stuff that they didn't think about to begin with. For instance, you can, if you have an annual allowance charge, you can use voluntary scheme pays from a personal pension to settle annual allowance charges derived from the NHS pension. And back when we had lifetime allowance and all of those things, members who had previously built up personal pensions were thinking, well, I'm going to get taxed loads on my personal pension, but it's still worth £10,000 to HMRC, so I'll use that to pay my tax charge. And originally there was no mechanism to undo that part under McCloud, but that's now been remedied.
I think that's the moral of the story, isn't it? Things that they don't foresee when they introduce new legislation, etc., which is why we're probably in this situation in the first place.
But I would say, though, the public sector remedy team, they've been really, really useful on this. So they seem to be a very good team and are keen to help people, which is good for HMRC.
Absolutely. Another question's come in. Is the contribution record you recommend asking for the same as you can see in the total reward statement?
No, so total reward statement is actually based off a cut of that data. So the total reward statement will tell you what your benefits are as at the end of the last scheme year. It will also give you a breakdown in the 2015 scheme of your pension pay for those years, but it won't show you all of your historic pensionable pay. If you're a practitioner, yes, you'll be able to see the dynamising sheet with each row showing each year how much your earnings were for that year. But for example, pre-practitioner membership, that's not going to be on there. So it's still worth having a look at that extract spreadsheet at least once in your career. To give you an idea, we see about 1 in 8 cases have an error on that. Now, it might be because we tend to attract people that have got problems with their pension, so it might be a disproportionate sort of ratio. But yeah, we are seeing quite a lot of people that have got mistakes on those.
Yeah, same here. And we request it generally for every single client, whether they have an annual allowance problem or not, just to check the gaps and just to make sure that that record's complete. And actually, I think for ones we've requested this week, I think there's a system error is the response that we've been told. So you can't actually get one at the moment. But whether
again,
that's all linked.
With McCloud calculations, because they've had to sort of put a hold on stuff.
Yeah. Now, my understanding is obviously we may have certain members who are quite far from retirement, so that decision making is going to be some way off. But my understanding was that they would be given an annual statement their almost their total reward statement would show what the benefits would be had they do one way or the other. Is that still what the proposal is?
The plan is, yeah, and I think the last time I saw anything on this, they were hoping to bring this in 2025. Again, I don't know where they are with that project and whether or not they're going to deliver that, but everything seems quite ambitious at the moment to deliver those types of changes. But ultimately, you should be made aware as you progress through your career the value of the benefits, were they in the legacy scheme or if they were in the reform scheme.
Yeah, but again, like you said, everyone is so different. So we, I must say the sentence once a week, but get financial advice on your personal situation and what's right for you as an individual.
Yeah, there is no one size fits all for this at all.
No, absolutely. And that goes with the contingent decisions as well. I think, bringing you guys on board was, you like you said, you look at this for clients, so they can reach out to you to have those conversations and get support on those decision-making processes.
Yeah, absolutely. Well, just to give you an example, we had a consultant that we actually mapped out the numbers for. So they deferred back in 2015-16. And if they do nothing and just take their pension, they get a pension of around sort of £60,000. If they paid back all of the contributions, which are about 140 odd thousand, their pension would go up to 64.5. However, if they were a little bit cute about which membership they reinstated, they could pay something like £70,000, but end up with a pension of £66,500. So pay less, get more. That's because the NHS pension is so ridiculously complicated, even more so for GPs, and the very, very few people that actually understand how the GP pensions work. But just to give you an idea, in my team, 3 of them actually worked on the pensions team for annual allowance at NHS Pensions. They designed some of the systems there as well. So we're very familiar of how those contingent decisions would impact your benefits, and also things called your Reg 72 factor, which is how your benefits are uplifted because you're pre-practitioner membership, how it would consequently impact your FVEC, which is this flexibilities value earnings credit. It is ridiculously complex, but there is support out there if you need it.
Absolutely. Yeah, absolutely. Just a couple more questions before we draw it to a close. So as accountants, we do quite a lot of this work for our clients, liaising with HMRC, liaising with NHS Pensions, acting as agents. The digital service, HMRC digital service, is there a functionality for agents to go in and access it, or does it have to come from the individual themselves? Because even just entering that information can be quite daunting for a lot of people.
Yeah, so it's interesting that HMRC went down the route of designing this with members in mind rather than agents in mind, because annual allowance tends to be a complex tax consideration, and in the main, lots of people use agents to do that for you, so that you don't make mistakes, to be perfectly honest.
Yeah.
Now, whilst the digital service is designed for members because you sign into your own individual government gateway, there's a bit on the section where you can say actually continue without signing in. So this is where an agent can actually then process this on behalf of the member. So the agent can enter all of the details in all of the screens, answer all of the questions, and then at the end of that, they don't unfortunately have the ability to submit it directly to HMRC in the same way that you would do with a government gateway. But what you can as an agent do is you can then print off a PDF of the calculation results. And the latest from HMRC is that you would then send those calculation results along with an agent form that just confirms your authority to act and everything else. That then goes to HMRC, and then it all gets processed. So the good news for members is they don't have to sit there and go through 200 pages thinking, right, what does this one mean? I need to put income tax relief here. Is that everything? Does it include everything that was a band enhancer? Was it an income reducer? Was it a tax reducer? Whereas at least the accountant knows what all of those things are.
Terminology, yeah, absolutely. So that's good to know. And then lastly, assuming no other questions come in, if at the point, so we're going through this process, we're amending potentially figures for the last 4 or 7 years, depending which way round it works. on the assumption everyone's going back into their legacy scheme. If on retirement they choose to go into the back into the reformed scheme, we got to do this all over again and recalculate all those growth figures?
Thankfully not. So they've said that at that point, the opening values and closing values will be adjusted to be the lesser of the legacy scheme or the remedy, or the reform scheme, sorry, so that you won't have to revisit 7 years worth of tax charges at all, thankfully. We don't want to do this all again.
No, absolutely not. Okay, perfect. I don't think there's been any other questions that I can see has come in. So we will probably draw things to a close. Obviously, love to hear any feedback you have. If there's any further comments that you have, any other things. I've put my contact details on there, but Graham, I don't think, were your contact details on your slides that people can
yeah,
go
you
back?
can either go via our website, or the easiest one tends to be just drop us a quick email. So it's admin@medifintech.co.uk. And yeah, always happy to answer any questions.
So please do reach out to Graham or I with any questions that you may have. Hopefully you found the sort of last hour or so useful. I think generally the crux of it is you're not alone. You don't have to struggle through this on your own. I know there's lots to think about, but there is generally lots of support out there to help you through this process. So please do reach out to make it as pain-free as possible for you. Graham, any final thoughts from you before we say goodbye?
No, the key thing is don't bury your head in the sand in this one. We've got this potentially short window of opportunity where you could significantly improve your pension, you could get refunds, and I'm not sure if they're willing to extend deadlines as much as they might do, because HMRC are on the hook for giving back quite a lot of money here. So you kind of need to get it processed before they take it away.
Yeah, absolutely. Well, Graham, thank you very much for joining us today. I certainly found that really useful. So wish you all a good afternoon, and thanks for joining us.
Thanks all.